Oil is largely regarded as one of the most important commodities in the world. Some would argue the most important. Regardless, the price is highly volatile and subject to geopolitical tensions. We have seen several cases of it over the years, and the impact is felt globally. Today, oil has fallen into a bear market. But what does that tell us about the global economy? You came here for the truth, so let me unveil that for you. Today we are going to look specifically at oil. It's obviously crucial to what we are seeing at any given time, and I wanted to bring out this video and talk about how it has fallen into a bear market here in 2018. Let's begin by taking a look at this article out of CNBC. U.S. crude falls into bear market as growing oil output points to oversupply. That's interesting. We saw this once before, and that's an issue I want to get into further, but let me read on. U.S. crude is trading near a nearly 8-month low. Brent is hovering near its lowest level since mid-August. China's October crude imports hit a record 9.6 million barrels per day, and U.S. crude output is predicted to break through 12 million barrels per day by mid-2019. We have seen the output of U.S. oil rising faster and faster. It has surprised many analysts. This here shows us that it is possible to be able to produce its own oil, for the U.S. to produce its own oil. China at the same time has been consuming at a rapid clip. They have been consuming everything from oil to all different types of commodities out there, and that continues to be a growing trend. So obviously we know what's happening. There's more construction, there's more growth that is occurring in China. While it may be slowing down compared to its peak, certainly it is still happening. All right, now whether it's been used on ghost cities and infrastructure that's currently not needed or not, that's besides the point. I'm just trying to show you that it is in fact still happening. There's a severe amount of crude imports and other commodities. There's no doubt about that. Now, looking at this issue specifically with an oversupply, it is something that I want to get into. Let's first look at the price. You can see that as of right now, crude oil had peaked out over $76 a barrel. It had moved down at the time of this recording to $60 a barrel, 61 to be more precise, depending on when you're watching it. It could be either direction. But essentially, we have a significant drop in really a matter of about a month. So it did decline rapidly. Now, this decline here wasn't the first time this has happened. I mean, we've seen the tensions escalate in previous instances that results in the price skyrocketing by 20% or much, much more. What about declines? We've seen that as well. Well, looking at this, I pulled this up to show you, to give you a visual indicator that this has in fact moved, dropping further than 20% officially in a bear market. It's not the only thing in a bear market today. The too big to fail banks are in a bear market. Banks in general are in a bear market. You look at other industries, bear market today. Some stocks have still fallen into the bear market. So many of them are experiencing their 52-week lows right now. There's a lot going on here. Not the topic for today's video, but certainly something that I need to discuss, and that talks about the oversupply issue. Very quickly, I wanted to tell you what's happened over the years. You have seen that the price had peaked out at about 100 and let's say 100 plus per barrel. Okay, a few years ago, we saw that price comes down to about $30 a barrel. And of course, these are very rounded numbers, all right? So we see that, $30 a barrel. And then slowly and painfully, it rises up to about $40 a barrel, maybe a little bit more, and was trading in this range for a considerable period of time. Now today, we have seen that rocket higher to where it is, as of this recording, $60 a barrel. But what was this right in here? Why did it go from 100 plus to $30 a barrel? And that is something that largely was accepted by the analysts, by the trading platforms, by all the mainstream media to be an oversupply. I've been calling this out for what it is ever since day one that this happened, that is entirely false. There is no possible way that it can drop from $100 a barrel to $30 a barrel based on oversupply. You do not get millions and millions of extra barrels suddenly appearing. That's not true. Now, maybe the $100 plus wasn't justified in the first place and it should have been closer to $30 a barrel. Maybe we had that situation. But if we're going to say that it should have been at $100 a barrel, then definitely it shouldn't have fallen down to $30 a barrel based on oversupply. But here we are. Today they're saying that we have an oversupply issue, and that's why it has fallen, along with everything else in October, down 20%. All right. So could it fall now from $60 a barrel down again to maybe 50, maybe 40, or maybe even below that? And certainly it is possible. Who knows? If it can fall from this height, certainly it can fall from 60 down to 40. It is possible. The economy right now is certainly not as strong as it once was. We have enough output coming from different countries. I don't think there's necessarily a shortage in terms of what they're able to pull out today. Now, maybe 5 years, 10 years, 20 years from now, we have a problem. But right now, it seems like there's enough oil to continue this. With all of these new procedures that they have, there's a lot going on. So I'll talk more about that in a second. But these prices are essentially very volatile. With a high price, you cannot sustain the economy. Certain economies around the world will benefit greatly. If you're an oil exporting nation, when the price is high, you're going to do well. When the price is low, your budget is going to suffer severely. You might have to get into your reserves. You're going to be dealing with issues. There's no doubt about it. I've done videos about that before. Looking back into the pages of history, you can see the oil shocks previous many decades ago, looking at the 70s where we experienced an extreme inflation in the price of oil. Obviously, that affects gasoline, that affects transportation, that affects the prices of everything. There was real high and heavy inflation that was ultimately subdued with extremely high interest rates. We'll see what happens today. We don't have the same situation going on, but certainly it's worth keeping an eye on. I just wanted to show you what has happened historically. Looking at this now, imagine the time frame here, 2008, where oil skyrockets. In a couple-year period, it went from, let's say, about $50 a barrel to, it was $145 a barrel, if I'm not mistaken, at its peak, somewhere around there. So it nearly tripled in just, let's say, maybe 2 years. If you look at the lowest point here, that seems to be right at the beginning of 2007. This is like a year and a half, and the price tripled. So if it were to do that today, that would collapse the system. Now, was that the reason why we saw this big downward slope? Well, everything was going on at the time. It wasn't just oil that was a major factor, but it's interesting. I mean, it wasn't only oil that was rising at the same time as well. Other commodities did the same thing. So we saw a peak here a few times. It was trading in a range, what looks like about 110, let's say, down to 75 at its lowest point. And it really got into this range over here, over $100 a barrel, as I suggested to you, and then drops down quite a bit, down to $34 a barrel. All right, in 2015. Oversupply apparently is the reason. All I'm trying to show you is that the prices are subject to geopolitical tensions. This right here shows us the current shale plays. And that is, in fact, going from a chart that was, I think it was from 2014 or something. So I'm sure this is a outdated by now, but I just wanted to show you how this has really, really expanded over the years, where you see a lot of these companies going in. This is, from what I can tell, it's not very safe, but I don't have experience in this field. Okay, but just from what I gather, the way it works, it does not seem safe. It definitely pollutes the water table. It looks like it's doing a lot of damage to me. Whether or not you agree, it's my opinion. I don't work in this industry, so I don't know. But you can leave your comments on that. This right here is the US exports, showing you which country that oil is going to. They are obviously sending to Canada 15%. Mexico gets 15% of that right there. And it's just strange the way things work. The US exports oil to Brazil, to Panama, to Venezuela. Does that make any sense? It's odd. When you look at what countries do with their exports, sometimes it's completely unexplainable. That's all I wanted to talk about today. We will experience a shock, and I don't know if it's going to come from oil or from another commodity, but I assure you the price of oil will be dramatically affected by what happens. There's no doubt about it. If you found the video informative, please give me a thumbs up. When you give me a thumbs up, you're supporting the channel, so I do appreciate that very much. And last but not least, if you found this video informative, I know you'll find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. So you can get that at the link in the description below. And if you're more interested in the audiobook version, you can get that at themoneygps.com.